Uh, I just created this concept of this shortcut to $1 million. The $1 million is foundationally, it's the target that everybody sets for retirement. So that's why I'm using this. But I fell into something kind of by accident, and I'm going to sort of put two things together. One is an investing concept and one is a trading concept, and show you how they can work cooperatively. And what you will find, as Fausto said, I do things differently, so please forgive me, but you're not going to see charts or indicators or things of that nature. In fact, you're going to see something really weird. You're going to see a thermometer, water, and hot chocolate. So, depending on what your thirst is today, we will fulfill that, but we will get to that here in just a little bit. If you don't know Traders Reserve, and 99% of the world does not know Traders Reserve, and that's okay, we've spent the last 15 years providing education and trading services to self directed investors who want to generate income from selling options. We provide content 3 times a week on our primary website, tradersreserve.com. We also provide additional content, ideas, and reports via email newsletter. Now you know us. You've probably seen this lovely slide multiple times throughout the day. Trading involves risk. Trading involves risk of loss. It involves profits that can't be guaranteed. Nobody can tell you you can make money. Nobody can tell you you won't lose money. Nobody can ensure that anything wins 100% of the time. So now that we're all friends on that front, the one thing I will ask is when I share trading results a bit later in this presentation, they are from a live money IRA, a real money trading account. You, however, should consider those results hypothetical because you did not make the trades. Just because we did and just because we made them in a real money account doesn't make them, I don't know, real, for example. So please treat them even though they are from a real money account. I'll remind you again when we get to that point, but please do treat those results as hypothetical. What are we talking about today? I'm talking about a shortcut, $1 million shortcut. And to get to that, I'm going to share with you the dead simplest investing plan, literally proven to reach $1 million. It can't be argued with. This is both amusing and uh, I think it's cool, but I'll let you decide. I'm also going to share with you the obvious catch because you know as well as I do, there's always a catch. And then I'm going to share with you how to use options to solve the catch, how to overcome that hurdle, share with you why this works in every market condition, including current market conditions, show proof that this works, share with you the risks and rewards, and then let you answer the only question that you need to ask yourself. I can't answer it for you. Only you can answer this one question. And I'll share that question with you at the very end of this presentation. This shortcut today is for anyone who has an investment portfolio, $100,000 or higher. You can tap into what I'm doing with less money. It's harder to do, but setting that sort of bar, $100,000 or higher, just gets us on solid ground. For those of you who are far behind in retirement needs or goals, as most Americans are, larger portfolio investors, and this is the fun part, I'm talking 7 figure portfolios. These are folks who can use this approach as a hedge to a percentage of their portfolio, a way to hedge your portfolio against bad things happening. It's also for people who are late retirees. Like you just retired, maybe you're in your late 60s, your early 70s, but you still need some income and security from your portfolio. And of course, the early retirees, the retire early people, anyone who wants to get to $1 million before retirement. And let's clear one thing up. The $1 million goal here or objective, it ain't like getting to Disneyland and you get out of the car and you say, "We're here." It's a starting goal because I guarantee anyone who's ever made it to $1 million, the first thing you think of is how do I get to 2 million, right? So it's just an initial goal. You're not limited here. It's not the end point. It's just a point on your financial journey, whatever that journey is. But this chart is still the problem in America today. The average retirement portfolio in the US is still below $180,000. So it isn't anywhere close to $1 million. And yet, You could research. I've done this across Google. No shortage of research that says you need 1.25, 1.5, 1.75 million dollars in order to survive retirement. And most of those models assume portfolio drawdown, meaning you're taking your money out in order to support your income needs in retirement. One of the fascinating uh, points that you'll discover from today's presentation is you don't have to draw down your portfolio because your portfolio can actually pay you in a different way. But at the end of all of this, what I keep finding is that roughly 3% of Americans have reached $1 million in retirement assets. That's it. So 97% of the people have not. That's too many. So, how can we fix that? Well, we're going to start with this idea of the simplest investing plan. And let me be blunt, on its face, it's laughable. Because it's so simple. I've tested this concept with a couple of people, and their responses almost prevented me from sharing this with you. But I'm going ahead anyway, because you may even consider like, okay, this is a waste of time. But I'm telling you, if you listen to this, it is not, because what I'm about to show you is both historical and mathematical fact. It is not a strategy, not an algo, not artificial intelligence. It is not some newfangled technical indicator. It's not a shiny object. It's exactly the opposite. It is the analog to the digital. It is old school with a little bit of new school sprinkled on top. Now, what is that plan? This is the simplest investing plan process. 3 steps. Make one simple investment using the second safest investment on the planet. I can tell you that it's even backed by Warren Buffett, and I'll prove that to you in a minute. You make this investment one time each year on the first trading day of each new year. That's either January 2, January 3, or January 4. Those are the only 3 days that can qualify as the first trading day of the new year. And then you repeat this process every single year for between 5 to 30 years, and that will get you to a retirement portfolio worth up to $1 million. In order to use this process, just remember these 3 simple numbers: 10, 30, 7. It ain't the Powerball, but the lottery at the end could be worth more for you in retirement. Now, what does this formula mean? This is the process, this is the formula. Let's put it all together real quick. The 10 is $10,000. Make one $10,000 investment each year on that first trading day of the year in one ticker, which we'll come to next. You repeat that process for up to 30 years, and the 50-year compound annual growth rate behind that one investment is 7%. That's as long term as I can realistically leverage. But if you follow this process over the course of 30 years, $10,000 a year over 30 years, getting that 7%, this is what happens to your money. It grows to potentially $1.1 million in up to 30 years. Now, in shorter periods of time, you can do certainly much better than the 7% this investment has. And it continues to be the best, the simplest and best plan that I keep coming up against or for anyone who's just, even people who are just getting started. So if just take this plan and share it with your kids and your grandkids, and they're going to be in better shape than we ever were, because we never had this kind of knowledge or the level of knowledge that we have these days. And I told you, it's one ticker, one investment, and that's the S&P 500 index, the second safest investment on the planet. Specifically, a low-cost S&P 500 index fund, and I'll explain that in just a minute. But I told you it was a little laughable, right? Overly simplistic, and yet, wait for the next couple of slides. Number one, it's backed by Warren Buffett. In the only media interview in which Warren Buffett has ever disclosed the dissolution of his estate upon his death, which was March of 2024 to CNBC, he said that he has directed his estate to invest 90% of his wife's inheritance in a low-cost S&P 500 index fund. 90%. Now, let's be honest, we're talking about billions of dollars, so I'm sure his wife is going to be just fine. You, on the other hand, I don't know. But the second part of that interview, Buffett said this: given the choice between a 10-year treasury bond and a 10-year investment in the S&P 500, he'd buy the S&P 500 in a second. And the numbers back him up, as do the numbers behind the simplest investment plan. Because over the last 10, 20, and 30 years, if you had done nothing more than this, $10,000 a year, once a year for 10, 20, or 30 years, your portfolio would be worth anywhere from $259,000 to $2.4 million. Surprised? And that's including the dot-com crash, the recession of the early 2000s, the great financial crisis, the collapse in 2018, the pandemic in 2020, and the bear market in 2022. And yet, doing nothing more than that one thing every year for an extended period of time, 250,000 to $2.4 million. And let's go a different direction using just an example index fund from Vanguard, their Admiral Shares Fund, which is symbol VFIAX. They need to work on that. That's too hard to say quickly. Their returns mirror that. This is a 15-year table of the VFIAX's returns with the same $10,000 investment once a year, every year, over the 15 years since 2010, nearly $500,000. We don't have to make life complicated. Sometimes simple is better. Sometimes simpler is easier, and sometimes simpler is more profitable long term without necessarily negating or affecting the other trading that we want to do in the short term. But at the end of all of this, when we look back at this problem, it's clear that people aren't doing this. And my question really is, why aren't people doing this? This is what got me going down this rabbit hole, asking this question. If the numbers behind the S&P 500 as an index fund are historical and mathematical fact, which they are, why aren't more people doing this? There are two reasons. Number one reason is most people don't have the extra $10,000 per year to invest because they have been trained to believe that the money that they invest in the stock market must come from their income or their paycheck. Well, it's not true. And I'm going to show you that it's not true in a minute. But if we can break that one belief that there's a better way to make those kinds of investments and you have another path to using your capital to continue to grow your wealth, then we're on to something. Now we're working toward a betterment for your future, simplifying things, keeping it easy. But the question really comes down to, why don't more people have that $10,000 to invest in? It's because they don't know how. So if I could show you how to create that $10,000 per year, just that small amount, right? I'm not talking about six-figure incomes here from a portfolio. I'm talking about 10 grand. I mean, 10 grand is what most of us made the first year we got a job coming out of college. Well, I did anyway, but that took me longer. But if I can show you that, then what does that change for you? How can that change for you? And the way that we're going to do that is with the shortcut, which is selling options for income. Now, for many of you, may have sold options, or excuse me, may have bought options in the past. Selling options is a little bit different. So I will walk you through some of the basics, some of the foundations here that you want to know, because it is a little bit different. And we'll start with the who. Who should consider selling options for income? I'm going to start at the bottom of my bullets here. And for options traders out there who are typically options buyers, the advantage to moving to the other side, to moving to the selling side, is you become the house. As an options buyer, and there are many strategies out there, but as an options buyer, you know that it can be difficult sometimes to achieve reliable profits, in part because options buyers are typically forced into the belief structure that they've got to get a 100, 200, 500, 800% gain, or the trade, or they lose money. That isn't true. It can happen that way, but it's not true. But that's one reason why options buyers tend to lose more often than options sellers. The second issue for options traders is the reliability of income or profits from their trading activities. And selling options has a higher probability of success. So for an options trader, there's value in moving to the other side, call it the dark side if you want. of the transaction between the buyer and the seller. For people who are working investors, near retirees, or people who want to retire early, one of the most important factors that you will learn and or discover here is how to leverage your portfolio for faster growth. That's accelerated portfolio growth by using what you have to generate income that can then be reinvested into your portfolio. It could be reinvested into the S&P 500 index fund once a year, every year for up to 30 years. And for retirees, it is a way to boost your income above safe money asset low returns. I'll share that with you here in just a couple of minutes. Or to avoid the high risk of high yield stocks. Those are usually the stocks that have 12 to 15% dividend yields. You buy them and then you discover the stock falls 30, 40, 50%. So the yield looks great, but the stock price and the value of your money afterward, not so much. So any of these groups should consider selling options. And as I stressed for retirees, this is the biggest problem for you as a retiree. Safe assets, like safe money assets, savings account, money market, CDs, treasury bonds, safest investment in the planet, and even the S&P, second safest investment on the planet. It takes so much capital to generate any relevant income that it makes it more difficult for you to do anything beyond these steps to supplement your income. Or if this is your primary source of income, you risk being living at or just above the poverty level, which nobody wants to do that in retirement. But this is between 100, I mean, you're looking literally at $100,000 per category here. It takes $500,000 in these categories just to get $21,000 a year. Can you do better? Yes, you can. And that's why we're here. That's what we're here to discuss. So some realities here. Most traders have bought options and lost money. I've done these webinars for over 15 years and on selling options. And I can tell you there are two things that I've heard consistently. And the number one is always, oh yeah, I've traded options before and lost money. Yep, the options buyer tends to lose money because options tend to either end at zero, worthless, or not be exercised 80 to 85% of the time. Now, that's a little bit of a misleading statistic, so I'll be not mislead you. The reason is because options chains are very long, and you can have anywhere from 30 to 50 different strike prices in an options chain that would never get exercised in the first place. So bear that in mind. That does still mean, however, that the options buyer tends to lose money. But if the options buyer is losing money, who's making the money? And the answer is the options seller. The options seller has more advantages over the options buyer, and they start with this point. When you sell a put or call option, you are collecting cash first. Just like any other transaction, the buyer is paying you for the right to that option, for the right to exercise that option. What this means for you is you are managing money you have already made. And this is where selling options is different than buying options because the options buyer is managing the risk of the trade moving in their favor, whereas the options seller is simply managing the risk in the money moving in their favor. And 80% of the time, it does. Now, there are risks to selling options. I will cover a few of them for you at the end of this presentation, but it's no different than any other asset. There is always the risk of loss associated with options, stocks, savings accounts, etc. So again, the options seller will begin their trade with an 80% probability of success. Probability, not guaranteed, but probability. And some key points about option selling. To sell a put option, first of all, if you've ever heard the term naked options, please don't sell a naked option ever. Not a naked call, not a naked put. That entails way too much risk of loss to you. The last thing you want is that margin call when you don't have the money. So trust me, follow these two steps right here, 1 and 2, and you will be okay. To sell a put option, You must have the cash value available in your portfolio as collateral in the unlikely event you are assigned shares. That means that the put option seller is leveraging cash in their portfolio or the cash value in their portfolio to generate income. To sell a call option, you must own 100 shares for each contract sold of the stock, which means the call option seller is leveraging shares of stock to generate income. So the difference here is, or the advantage to you as a seller is, you have the ability to leverage both the cash portion and the stock portion of your portfolio and to use that to generate consistent income. That income can be every day, every week, every month, every quarter. That part depends upon you, your trading style, what you prefer, or how you prefer to trade. To generate that $10,000 that I talked about a little bit ago, that $10,000 in annual income that we would then reinvest in the S&P 500, yada, 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 right? Uh, really requires $50,000 or more in dedicated money dedicated to selling options, meaning that $50,000 is not the base portfolio value. That $50,000 would be either cash and stock value as part of a larger portfolio. So I still recommend $100,000 is the minimum, especially with stock prices being where they have been today or where they are today. Stock prices being so much higher, it does require more money, more capital to leverage options when selling options. There are other tactics, other strategies that we teach which can reduce those capital requirements. But at a minimum, to generate consistent weekly income, that $100,000 level is the starting point, and of that, a minimum of $50,000 to get up to $10,000. That's the math behind all of that. A couple of quick points, simple points. Yes, you can sell puts and calls in an IRA, unless, of course, you live in Canada. Canadian investors cannot sell puts, but they can sell covered calls in a retirement account. I believe that's the RRSP. Sorry, Canada. Frankly, the only thing we really want from Canada is Lord Stanley's trophy. Outside of that, I really wish you folks would get better luck with your retirement accounts. But do be aware, if you're a Canadian investor, there are limitations. You can sell puts in a regular trading account, but not in a Canadian retirement account. And as I drew out on the little median chart here, again, in the middle age groups, 45 and up, this is where selling options should become a part of what you do. It does not need to be all that you do, but I'm willing to bet once you start getting the foundation, the concept, and the income, that it will become a larger portion of what you do. Not because you're going to be, billionaire style, but because it is consistent, it's repeatable, and most importantly, it is scalable. I'll come back to those points here in just a couple of minutes. Now, we set out our simple investing plan goal a little bit ago at $10,000. That was the minimum target to invest each year. You're not limited to that goal. When you're selling options, we have, as members of our services, have portfolios that range up to $2 million and some that are a little bit higher than that. So these are folks who are leveraging significant capital to generate consistent income. So you're not limited to $10,000, but it's a good starting point. But the biggest lesson that I can impart is to always break that number down into a smaller, more reasonable number, to a weekly goal, for example. And in that case, that weekly income goal would be $192. Now, surely you know how to create in any of your trading, how to make $100, $200 a week. The option seller has more paths to making that income available to them because of the breadth of companies offering options, because of the different times that are available, weekly options, monthly options, even longer dated options. So because of that, the importance in that goal is, number one, you don't have to make a lot of trades to reach that goal. You don't have to make trades every single week to be able to reach that goal. You can be as conservative or as aggressive when selling options as you want to be. So that gives you more flexibility, more choice in how you leverage this strategy. So let me bring in my props for those who are less familiar with trading options, selling options specifically. I told you we had a thermometer, water, and hot chocolate. This will all make sense if you just look at the thermometer and visualize a stock chart. This is how we're going to uh, share with you the process, the transaction process of selling an option, because it does differ from the buyer's process. So let's meet the Joes. The Joes have kindly made themselves available to be our guest losing traders today. So apologies to all the Joes out there. You are about to lose fake money today. Joe number one thinks that the temperature will rise above 80 degrees by Friday of this week. And he offers to buy the rights to your water, that water that we showed you on the last slide, for $100 because he believes the water will be worth more before the end of this week. So you collect $100 from Joe number one. Joe the Deuce, or Joe number two, thinks the temperature is going to fall below 40 degrees by this Friday. And he offers to buy the rights to your hot chocolate for $100 for the same reason he believes that the hot chocolate will be worth more. In each instance here, the Joes are the options buyer. They believe that the value of something will be worth more by a specific point in time, in this case, Friday. So we've collected $100 from Joe number one. We've collected $100 from Joe number two. We are treating these as two separate transactions because we have water over here and hot chocolate over there. So we're not treating this as the same trade. So let's go back to Joe number one. By Friday, the temperature has not reached 80 degrees. So Joe number one offers to sell back the rights to your water to you for $25. You take back that, excuse me, you give Joe that $25. And who made the money? You did. You made $75 on that transaction, and you have the water returned to you. Joe number two, Joe the Deuce, by Friday, discovers the temperature hasn't reached 40 degrees. So he offers to sell back the rights to your hot chocolate to you again for $25. You give Joe, oops, that should be Joe the two. You give Joe number two the $25. You made the money again. You made $75, right? So in each of these transactions, something did not happen. And because it did not happen, the two Joes were faced with a loss. To mitigate that loss, they offered to buy back, excuse me, to offer back to you the rights to your water or your hot chocolate for a small percentage of the original money that they spent, that $100 each. You accepted that, which is a good move, and everybody's done, right? The transaction is over. In each case, you made $75. Now, one of the complaints about selling options is often that the amount of money is capped, because it is, and too small. The When you sell an option, your income is capped, right? So that $100 that either of the Joes gave to us for the rights to our water or our hot chocolate cannot be more than that $100 for us as the seller, right? They're the ones who are hoping that it will be worth more than $100. What we're hoping for is that it will be worth less than $100. That's the option seller's shift or twist. The objective as the option seller is to sell high, buy low. We're all trained in exactly the opposite, right? Buy low, sell high. If you Once you learn to switch that to sell high and buy low, that's the option seller's gift. That's the goal of the option seller. So the second off complaint I hear often is, $30 or $50 or $70 isn't worth my time. Um, and I can't answer that for everybody, but I can tell you this: annualize it, and you'll never complain about that again. Here's an example: $75 times 50 transactions a year, right? If we could do this 50 times a year, and that would mean 2 weeks of vacation, and 50 times we're selling the rights to our water or our hot chocolate. That would be $3,750 times two different transactions is $7,500. That's literally the equivalent of two trades a week. Uh, the key here is to remember that selling options is an income strategy. We're leveraging cash, we're leveraging assets to generate income as a return on the capital approach. We can sell options, as I said earlier, this week, next month, even 90 days from now. But the buying option side is an outcome strategy. The both of those Joes needed to get the temperature and the time correct. And when that didn't happen, the value of the option for them fell and would have kept falling and allowed us to cash out on the buy low side. So that's the option seller's approach. That's how the option seller makes money. This key in annualizing numbers, I'll take this a bit further here in the next few slides, but you take any amount of money between $30 and $100, multiply it by 26 to 52. How many times can you replicate a trade during the course of the year? That process of annualizing can show you how rapidly that money can actually grow for you. For example, here is a little table, the potential annual income on a $100,000 portfolio. I mentioned that's our starting point. The income potential here is greater because you're leveraging less capital. Remember the slide that I showed a few minutes ago with savings accounts, money markets, treasury yields, right? It took $500,000 in across all of those combined, and the best you could do was about $21,000 in income on an annual basis. But here, using small returns between 0.5% and 0.6% per week on our capital, gives us anywhere from $26,000 to $31,000 in potential income per year, which beats the pants off of all those safe money assets by a lot. So you not only are you able to generate more income, have more income potential, you're also using substantially less capital to do so, which then frees up capital in your portfolio for other trading activities, other investing activities. You want to buy that one hot stock, now you have the money available to you to do so. You need to cash out so you can buy a new house, a new car, take a trip, whatever. Now you have the cash available to do so. So let me share with you, remember I said to treat results hypothetically. I want to show you actual trading results from March to May of this year. And it's important, and I'll show you why it's important on the next slide. This is a 60-day period from March 6th to May the 5th. May the 5th be with you, because not the May the 4th. This was a real money IRA. $150,000 was the base value at the start of the year. Our maximum working capital at any point during this period was around $45,000, so about 1/3 of the portfolio we have dedicated to selling options. With the exception of 2 trades in this table, all of these trades were opened and closed in this 60-day period. So we sold the water and then we bought the water back, right? The 2 exceptions were trades on Netflix and the GLD, the gold index, that were opened in mid-February but closed in the period. I left them into here simply because they were part of the closing process. So bear with me on that. But over this 2-month period, 26 trades, look at the symbols, look at the stocks that we traded: ExxonMobil, the SPY, the GLD, which is the gold index, NVIDIA, everybody knows NVIDIA, GE, Netflix, Eli Lilly, Domino's Pizza. Yes, Domino's Pizza. You can sell options on Domino's Pizza, and you don't have to wait for 30 minutes for it to arrive either. You can sell options on companies like Philip Morris, the FEZ, that's the Euro Stocks 50, Lockheed Martin, Capital One Financial. So what you see immediately is all of these are strong fundamental companies. They're companies that you know. I mean, for the most part, you know most of these companies. These aren't weird stocks you've never heard of. And what they all have in common is consistent availability of income by selling options. Typically charts that are tradable, have enough volatility that it supports the income that we want to generate from selling an option. And more importantly, they're stocks that we can repeat trades on throughout the course of the year. You'll see an example of that here in just a minute. But for the 60-day period, across those 26 trades, total income of $9,120. Remember, what's our goal for the year? 10,000, right? So all I need is another $900 and I'm done, and it's not even June. That's the power of selling options. When you learn how to leverage your capital, whether it's cash or stock assets, and notice we're not using our full portfolio here either at any one point in time. Markets have been so screwy, so nutty, so up, so down. We pulled back and reduced the capital that we've been using in the last, really over the last 4 months. But we were barely using a third of our total available capital. And yet still were able to generate results like those. And that's why it's important. We have weathered the storm. We've been we've been bullish, we've been bearish, depending on what we were trading. So let me go back for a second. We've been trading the GLD relentlessly. Why? Because the GLD has been in a massive uptrend. So we've been bullish on the GLD. We traded the SPY bearish throughout this first half of this period. We've traded other positions in here like Nvidia on both sides, bullish and bearish, depending on how the chart led us to the right trade, whether we wanted to sell water or hot chocolate. You guys are going to be so thirsty by the end of this presentation. I really apologize. I should have used beer. You know, what was I thinking? Anyway, all right. So I mean, you can see on this chart, it's been. I mean, if you're just a regular trader, you look at this and this probably scares you and says, you know what, I'm just not going to trade because I don't know how to work this out. But when you learn and understand the foundations to selling options, you'll never be afraid of the chart like this. And the reason is because the income potential when stocks, especially when stocks are moving lower as a collective group, the income potential is higher. Premiums for options are higher, they are increased, driven by an increase in the VIX, so the volatility index, the VIX. And that's what allowed us to get some outsized wins in that 60-day period. So if you look at some of the income here, $170, not exactly exciting. $114. Nobody's going to write a Facebook post and say I made $114 today. Maybe if they got the $1,170, but what you see here is stacked small results adding up to a significant income. That's the option seller's game. That is the approach and the process that we use. So looking at our full results so far this year for 2025, this is January through early May, mid-May, 73 total trades, 71 wins. We've had 2 losses. Nobody wins 100% of the time. Total win rate right now, 97.3%. Total income year to date, over $13,000. So we can put $10,000 aside, save it for January of next year. It goes in the S&P 500. And we have $3,000 for lunch money. I don't know. Our return on capital year to date is about 8%, which means annualized, we're running about 26% this year, despite how crazy the market is. And last year, for the full year, we made 259 total trades. That's 5 trades a week on average, right? 5 times 52, 260. That's it. We made about an average of about 5 trades a week. So we're not trading all day, every day, 5 days a week. We don't need to. One of the things you'll learn as an option seller is less is more. Fewer trades usually leads to more profitability. 259 total trades, 242 wins, 17 losses, 93% win rate, still can't win 100%. $34,635 in net income, that is inclusive of losing trades, or a 23.1% annualized return on our $150,000 IRA. We rebalance that IRA each year to $150,000 because it mirrors the average portfolio in the US. In other words, we're trading like the average investor. So we rebalance that each year. And then we use the cash for other things, company parties, things like that. So last year, our annualized return was a little lower, 23%. But $34,000 in net income is pretty nice. We enjoyed that. So I mentioned less is more, fewer is better. Trade the best stocks and trade them often. Out of those 2024 results, just 3 stocks accounted for 30% of the net income last year. Three stocks, and 17% of all of the trades. Those 3 stocks were Netflix, which I continue to advocate as both a stock to own and a stock to trade this year, NVIDIA and a company called Vertiv Holdings, stock symbol VRT. We traded those Netflix 10 times. We had 10 wins, no losses. There's the 100%. NVIDIA 17 times, 15 wins, two losses. And VRT 19 times, 19 wins, no losses. Total income, excuse me, total trades across those three stocks 46. That's less than one trade per week. 44 wins, two losses, $10,617. So just three stocks traded on average once per week still hits that $10,000 goal. And some it doesn't prevent you, at no point are you prevented from expanding and trading more issues, more stocks. There are other stocks that we don't trade them frequently, but we might dip our toes into them, like a Philip Morris is a good example. We have other stocks that we can only trade using monthly options, so we can't trade them as frequently. But it doesn't mean they're not profitable or that they can't produce the same percentage returns or income. So we will take on those types of stocks and use them as needed, but depending on the amount of time you want to spend generating income, your expertise or knowledge in this realm, you don't have to make a lot of trades in order to generate even just a small amount of additional income. Now, again, you're not limited. You can certainly do more, but the biggest and worst kept secret about selling options is this: the process to average $200 per week. That's that $192 goal I set earlier for you. The process to average $200 a week selling options is exactly the same as it is to average 500, 1,000, 5,000, even $10,000 per week. I told you a little while ago that some of our members have portfolios that range from $1 million to $2 million. One of those individuals at $2 million generates over $500,000 a year. On the face of it, that sounds insane. But if you work the numbers backwards, that's $10,000 a week and 25% a year. That's a 25% a year return on capital, which is consistent with the numbers that I shared with you earlier about that we've achieved between 23 and 26%. Right? So it's not like a mega portfolio has any substantial advantage that they're doing 50 or 100%. They're not. They're actually hitting roughly the same numbers, but they are leveraging their capital, they're leveraging their stock assets, and they're leveraging it relentlessly to generate income every single week of the year. Let's talk about risk. The primary risks when selling options can be traced to three key bullets. There are other risks, but they're more complex, more complicated. For time purposes, please allow me to simplify. The number one primary risk is buying back an option at a loss. That means that Joe number one was right. The temperature went above 80 degrees. The value of that water rose from $100 to $200, and you had to buy it back at a loss of $100. The second is assignment. When selling puts, if the price of the stock falls below the option you have sold, then you risk being assigned shares of the stock. That in and of itself does not guarantee the loss. Where the loss or the risk occurs is if the price of the stock continues to fall further, for our example here, more than 10% below your assignment price. Now, this is still not the end of the world, but one of the number one questions I get and have received over the last 15 years is, what happens when I'm assigned shares of the stock and the stock falls 20%? It's almost always 20% because we equate that with a bear market. So one little tip when selling options, avoid earnings. Earnings are almost always equated with those significant moves, 15% down, 15% up, etc. However, in other instances, anything can be leading to that. There are other tactics available to the option seller that are not available to the options buyer that can prevent assignment in the short term, delay assignment, prevent a loss, or buy time to recover a trade. So, like I said, some of these are more complex in their explanation. So, as I said, I've left them out simply for expediency and time purposes. And the third primary risk is on the covered call side, where the assignment of the shares get called away, the assignment of the shares, where those shares were held over a long period of time, meaning you risk creating a taxable event if you lose the shares, or if you've held the shares for, say, you've held 1,000 shares of Apple for 15 years, well, you don't want to lose those shares. So, tip number two, don't sell covered calls on shares you can't afford to lose. One of the things we'll teach you is how to rent stocks to generate income by using covered calls. You buy shares, sell a covered call, exit the trade. You do not want to own that stock for a long period of time. And on the put side, never, ever, 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 just in case I wasn't clear, do not ever sell a put on a stock you would not be willing to own if only for a short period of time. Never. If I wasn't clear, never. Key factors that determine the maximum potential income from selling options. Number one is the total value of cash and stock assets used collectively to generate income. The bigger the pool, like the $2 million portfolio, the more cash income can be generated. Again, this does not mean you have to use your entire portfolio to generate income. If you're just getting started out as an option seller, I don't even recommend doing that. Use a portion, build a foundation, learn the process, master the process, and then scale, then build. The second is volume of trades. That should be obvious, but the more trades, the more opportunities to generate income within reason. In any given week, we typically have 5 to 7 trades working, no more than that. Could we do more? Sure. Do we need to? Nope. So we don't. And the third factor is velocity of trades. That's how quickly you turn over your capital from one trade to the next. So think, for example, if I can open a trade on Tuesday and close it on Thursday, then I can open a new trade on Friday rather than I open a trade on Tuesday and then I have to wait 3 weeks to close it, right? The faster that you can close a trade, the sooner you can open the next trade. A subset to that, a sub item to that is why when we sell that water or that hot chocolate, we typically target 50 to 75% of the initial cash collected. So we showed you in those transactions that we collected $75 on each one. That's the 75% target. We do not target 100% because that creates more time and risk. By exiting as early as possible, we also free up our capital or our stock to be able to sell another option or to move on to another trade. So if all you did, literally all you did was learn how to leverage cash or stock assets to generate that $10,000 per year, push that $10,000. Oh, that was no fun. I lost everything. Hang on a second. My bad. There we go. No, I don't want an emoji, but let's try again. There we are. Sorry about that. So if all you did was learn how to leverage cash or stock assets to generate that $10,000, push that $10,000 into an S&P 500 index fund at the beginning of each year, how fast would your portfolio grow in the next 5, 10, or 20 years? Right? That 10-30-7 formula, applying that consistently gives you another path to building wealth. It's a weird path, selling options to generate the income, but if you think about it, your portfolio is producing the income that you reinvest into your portfolio to grow your portfolio faster and repeating the process on a regular basis. I told you there was one question. Only you can answer this question. And that question is option selling right for you? I cannot answer that question for you. I would ask you to consider it, but the best way to answer that question is not to immediately start selling options. The best way to answer that question is right here. It's called the Weekly Income Plan. It's a 1-hour training program designed to fast track you, to help you build a foundation in understanding the process of selling options. Remember, I said a little bit ago, the process to create $200 is the same as it is to create $500, $1,000, $2,000, $5,000, $10,000. It's exactly the same. If you can learn that process, with us in 1 hour. No fluff, no weird stuff, just straightforward execution of how and why you should be selling options, from the keys to the strategies and tactics you can use, how to find the right stocks or ETFs. Like I showed you with Netflix, Nvidia, and Vertiv, how did we find those stocks? Why did we leverage them? And most importantly, how to set an income goal and build a plan around that goal to meet or beat it each year. That is the key behind this. This weekly income plan is a training program we developed over the last couple of years. It includes on demand videos. They are easy to watch modules, 5 to 10 minutes per video. They include live transcript and closed captioning inside the video so you can read what's being said, whether hearing impaired or whether you like to see the words on the screen. It's your choice. You have full video controls so you can start, stop, pause, rewind, what have you. They include slide decks and transcripts so you can take notes, so you can refer back to specific points or videos inside of the training program. We also include desktop cheat sheets and a 34-page guide. This is where I take you more broadly, or excuse me, more in depth into building an income plan and the risks associated with selling options. So all of those complexities that I couldn't cover here due to time are covered in that guide for you. You can access anywhere: mobile, tablet, desktop, laptop. Our new members website is mobile compatible, tablet compatible, everything compatible. The biggest thing that I suggest, and we've been doing this even when we hold live events, plug into a big screen TV. Plug your laptop in, broadcast to a big screen TV. It is it feels different, and it's weird to say it, but trust me, if you do it, you will have an entirely different learning experience. And I promise you, there ain't nothing new on Netflix for the next 3 weeks that you need to worry about. Trust me, I've looked. My wife keeps telling me that there's nothing on Netflix, and she's mad about it. So what you'll learn inside of this program is the foundation. If you start here, in less than 1 hour, you'll have a secure foundation in being able to answer that one question: is option selling right for you? We provide you with the sorry, the evolution, how we came up with this plan from our 15 years of teaching and trading with people just like you. Then we go into the in depth to the how to sell options, the basics, how to find stocks, how to sell an option. Walk you through and share with you on what would have been a live screen, but it's recorded, the actual process. We also share with you how to build that action plan, right? That plan for you. Now, I set $10,000. Your goal may be higher, and good. I hope it is. So not only do you need to know how to build that plan, but you also need to know how to scale it. Then cheat sheets. These are execution pieces that help you with the process of trading, so that you know whether a trade is a thumbs up or thumbs down, and so that you don't skip or miss any of the steps in the trading process. So one last piece, and you can actually get this right now on tradersreserve.com. It's our weekly income report. Every week we publish our wins, our losses, the good, the bad, the ugly, in a special content piece called the weekly income report. You can read back through the last 8 months, something like that, and see how we've made money, what we've made money on. So weekly income plan, it's $49. This will give you the foundation. It will help you answer that question, determine whether or not selling options is right for you. It will help you build that plan so that you can get, at a minimum, that potential $10,000 per year, which you can then invest in the S&P 500 over the next 30 years to reach $1 million. That's the shortcut. For everyone here at Traders Reserve, Fausto, I want to thank you again. That ran about 8 minutes longer than I expected to, and I know you have 2 minutes left until the next speaker. So if you have questions, that's our email address, support@tradersreserve.com. Just email us, and either I or my partner Dave will get back to you. So I apologize for running so long. I think we have the link in the chat. I don't know, Fausto, if anybody can. I can't see anything right now. So there it is. Okay, yeah. So $49 weekly income plan. It's an hour and 8 minutes, but it will give you the foundation that you need to know whether this is right for you. It is not right for everyone, but it may be right for you, and I hope that it is. Fausto, thank you for your time today. Thank you, all of you, for being a part of CTU's May event, and I hope to see you again in a future event.
John, thank you so much for being here, and that was amazing. Like I said, one of the features of today's event, understanding a little bit more of a really cool, really good option strategy. Like I told you, if you saw him on my podcast, it was a very engaging. A lot of people want to know a little bit more about it. So now here's your opportunity to get a really good deal on it, to learn a little bit more about it. So when you get a chance, ladies and gentlemen, go out there and register. In the meantime, I'm really excited to bring in our last speaker.